What are some of the factors affecting the working capital requirements of a business? First, the nature of the business plays a role. Service industries and trading firms need less working capital as compared to manufacturing firms, which deal with more inventory. Next, the scale of operations. Larger businesses need more working capital because they manage larger inventories and may have more debtors. The business cycle is another factor. During a boom, increased production and increased sales will drive up working capital needs, while a recession typically lowers them. Seasonal factors also come into play. During peak seasons, more working capital is needed due to higher activity, whereas during lean seasons, less working capital is required. Moving on to the production cycle, longer cycles increase working capital needs, while shorter cycles reduce them. Now, credit allowed to customers increases the amount of working capital needed, since the business will have more debtors waiting to pay. On the flip side, credit availed or credit available from suppliers reduces the need for working capital by allowing delayed payments. Operating efficiency is key too. Efficient inventory management and faster debt collection reduces the need for working capital. Availability of raw materials affects stock levels. Freely available materials mean lower stock and less working capital required, whereas any need to maintain high stock levels of raw materials means that more working capital is required. Growth prospects matter as well. Businesses aiming for high growth will need more working capital to meet the increased demand. In highly competitive markets, you might need to hold more stock and offer flexible credit terms, both of which will increase working capital needs. And lastly, inflation, which means that rising prices for materials and labor will push up working capital needs to maintain production. In summary, the working capital requirements of a business are influenced by a variety of factors, from the nature of the business to economic conditions and operational efficiency. All of these factors need to be considered while managing the working capital requirements of a firm.